Hello, good morning, everyone. Welcome to the show. Hi, Steve. Hi, everyone. How is it going?
Hello, everyone. Good morning. Let's finish the week green, Henry, either in our P&L, prop firms, or our mindset leading into the weekend. So, yeah, let's go. I'm ready.
Let's go. Perfect. So, guys, just a quick note. Don't forget, don't listen and trust anything we are saying. It's pure entertainment and educational content. So do your own thinking, do your own testing. Never trust anything anyone tells you. So yeah, be aware and enjoy the show. Let's go. All right, Steve, what's happening? Guide us through what's going on.
Yeah, interesting. I'll cover this a little later, more in depth, but you don't see this too often, Henry, where we have a gap on a Friday. This is not a Monday. This is not the weekend where we had some heavy news. No, this is a gap where the market had some, bearish price action, a bit of a sell-off. You zoom in, and we never closed the gap. Look at that. Isn't that amazing? Where
Unbelievable.
unbelievable, right? Gap was about it was about 30 points, but total sell-off, 100 points. We tried to close on Asian session, but no, it never closed. And because the gap was never closed, I would say we are in bearish territory, and this is my pivot of the day. We can get into some news, but before we get into that, let's look at Forex Factory, my friends, and see on the economic front what is incoming, what is on the previous tape, forecasted. It's interesting, but Forex Factory, it's just showing us as yellow folder, but on Financial Juice, it's giving us as red. What do you think, Henry? I think this is more on the red side.
Yeah,
We had some volatility here
I
with
agree. I agree.
the Flash PMI, Flash Services PMI, and New Home. So yeah, interesting, you guys. How different websites, different readings, but when you've been involved with the markets this long and seen it all, then you can kind of filter out what is real and what is lagging behind it. Yeah, to be honest, yeah, it's still a good website to use, Forex Factory. But if you go on to Financial Juice, you guys, this is Red Calendar News Event, and I would confirm it as Red Calendar News Event. And yeah, so let's see what's going on. The forecast, the previous tight range there, as we're seeing. Yeah, manufacturing expected 54.4. Previous was 53.9. And services, Flash services at 51.2. Forecast 51.3. So yeah, not much of a gap between the forecast and the previous.
I just want to say one small thing
Go
that
ahead.
the listeners, the viewers need to be aware of that U.S. economy is mainly our service economy, right? So this is actually the number you're looking for. Manufacturing is important if it's a big outlier, or if it's like super huge outlier, like they're predicting 54, it comes in at 49. Everything under 50 is like basically a decreasing economy, right? Economy activity. But services, it's basically what all the traders are looking at. And if services are coming in at 49, like with an outlier under 50, that will have a major impact on the economy, because then it might be implying like, all right, is it AI? Is it inflation? Is it job situation? So just a little explainer to people who might be not aware what it means, right? And it was a couple of years ago. Manufacturing has been plumbing, like really collapsing, 47, 45, whatsoever. But service has been going up. And so it didn't matter, because as long as services went up, the markets also went up. The service sector was healthy. So yeah, guys, services, it's the one that you need to watch out for. So just something to be aware of.
Yeah, thanks for that, Henry. Yeah, I didn't even think about it like that. And this is why we have you, Henry. You're the expert, my friend. You have the
My
knowledge.
150 years of experience.
150 years.
Yes, combined experience
He
of
was one of the
one man.
first guys entering Bloomberg and
Actually,
the terminal, and he has it all, my friends.
as though no JK guys, JK. But yeah, I've been around for a while. Had different jobs across like inside the industry, obviously, but in different positions, different jobs, different variations. So yeah, I don't know everything, right? There's some stuff I don't care. I don't like, all right, I don't care. But yeah, so flash service is the one to watch out for. All right, and new home sales, 10 a.m. Important if it's a huge outlier, right? So because obviously the whole construction sector inside the US, it's also big with real estate and people making money. It's also always shows a sign of the health of economy. So if you get on print that really deviates in a big way to the downside from the forecast, then it might also be interpreted as a bad news event. But again, never imply, never assume, always follow the chart, right? Because like let's say you get a negative service 49, you get new home sales 550 and the market pops up and you're sitting there like, oh no, it doesn't make sense. Henry told me that it's like a negative for economy. The market might think like, oh, all right, economy collapses, so you might get a rate cut, right? And and then it's all changes. And therefore, guys, it's what Stephen Dye trying to tell you. It doesn't matter what you think. It's basically just follow along with the chart. It's important to get an eye on those things, to be aware of it, and but it's more about the impact, right? So if you get a big outlier event that's not priced in, and if it's a small one, it probably will not matter much. But if it's a big outlier that market is not prepared for, then you will get an initial impulse and then just like stay with the chart and let it dictate you. So yeah, there's something I want to add at this point. And
Yeah.
Steve, sorry, and go ahead.
No, perfect. Yeah, I'm making a mental note of it. If we see a big spread in the numbers, and if we first thing I'm looking at as always is the reaction, and if we get a big reaction, then I'm going down this forex factor, and I'm gonna try and magnify. Yeah, if we get the 49 number, then it would make sense whether it's upper bearish or bullish. But like you guys said, or like Henry said, market's always forward looking. Never try to beat out the market. We'll look for the reaction and then go back, see what the number is, make a note of it, and plan out your day going forward after the fact. So yeah, like you said, if it's a beat, keeps the risk on, bit alive, most likely, and gives Nasdaq the green light. But most likely, look at the reaction, look at the print, and set your risk parameters in a healthy way. Especially since you know what, you guys, it's Friday. Don't be risking too much. Rotate your accounts, scale your accounts properly. If you guys only have one account, ease off the pedal a little bit. I'm not saying the opportunities won't be the same as yesterday or the previous days. It might be a better opportunity. However, it's a 2-day break. You want your mind to be fresh going to the weekend, whatever plans you have. Do not ruin those plans, because we all know what trading can do to your mindset. If you over leverage, if you FOMO, over trade, and revenge trade. The worst impulses there are.
The biggest problem with Fridays is that, especially if people had a rather good week so far, and then they come on Friday and they might be tired, they might be excited, they might be looking forward to the weekend, just like to bring the day through, and then they start out too eager, getting into the reds, right? And then but the overall week has been green, and then they're like, oh no, I don't want to end, I don't want to ruin my green week so far, and then they start to fight it through. This is actually where most of the damage is done, by not sticking to your overall rules or risk management. So yeah, just something to be aware of, that Friday is really famous for destroying accounts and getting people into troubles,
Yeah.
because they are forcing it way too high. And yeah. All right, let's continue.
Yeah, Henry sees it all. He sees all the stats, and
again, 150 years of experience.
150 years experience. He sees your accounts. He sees my accounts. So you can never hide from him. No, I'm just kidding. Jokes aside.
Yeah, no, jokes aside, guys.
Oh yeah, like what's my plan, guys? What's my mindset? I always stay flat from 9:50 to 10. 90% of the time, 9 times out of 10 until 10 a.m. If there are no news, let the news clear. Let the structure build on the charts. No bias on price or volume. always just staying sharp and just seeing how everything plays out. As you can see, there's quite a bit of structure that happened. Pre-market, as I mentioned, the gap right here never got closed. Let's just zoom in here and see where it is right now. Sorry for my voice, you guys, but right around 28,739. Let's just map this out. Gap from above, just to keep it in mind. And yeah, this is actually going to be my pivot of the day, because if price was not able to come back and retest it during the Asian session, then yeah, we're in bearish territory. And I also have on my ratios Nasdaq as the weakest index compared to all other four, with ES, Dow Jones, and Russell 2000. So that's what I'm looking at for today, you guys. So like I said, just let the news clear out, see how the structure builds, and just be patient. And patience is always a key word. We hammer down, you guys, because it's so important. Don't rush into your setups. If it doesn't hit your entry, move on to a new setup, or try and strategize ways where if it doesn't hit your entry into a demand zone, if you're, let's say you're looking for buys, then how to restructure into other indices where you don't miss the setup, because the setup will always be there. Never rush into it. Also remember, you're never going to get the best price. But what I do is, I let volume build, structure build, set my limit orders, and then plan my my buys from there. So anyways, yeah, guys, let's I think that's good for now, Henry. News is out of the way. Oh no, sorry. Let's look at quickly the hot story, the main impulse of the day. Yeah, we're seeing some explosions. Sorry, guys, I missed that. Heard it, Jask. So yeah, some Iranian news. A little bit of mix up with oil.
Obviously, right? It's either Iran or it's Trump. So only those two things. There's nothing else.
There is, every day there's something going on, you guys. So yeah, this could have been. This news came out about 40 minutes ago, but also could have been affecting charts all day, as well as the gap that we saw earlier. And as we know, gaps act as magnets, so just wait for New York open on that. But yeah, some Iranian headlines adding to fresh geopolitical risk. So just keep that in mind. Keep oil in mind. So yeah, anytime we see headlines with explosions, Iranian news, state TV news in this area, then yeah, always keep oil in your charts. See how it's affected, because it gives the inverse relation to NASDAQ. Since we all know we're trading NASDAQ. Just Middle Eastern tensions, and one side is just willing to keep things open or closed. I don't know what's going on, Henry. There's just so much.
Yeah, I think it's a good transition to take a look at the oil chart. And I'm sorry. So basically, crude had a really nice run up, right? We talked about 2 days ago. Breakthrough run. Another day. Yesterday, today a small correction. And this is the thing that people are watching for. Brent, right? Brent hitting at the hundreds level. And this one is super important, guys. This is like the whole world is watching this. Like everyone on the Wall Street is watching the 100 level. Plus minus, right? Because this is like the make or break point. And I'm actually super surprised, because if you consider that this year has been the outbreak of the whole of the first strikes, right, in March.
Yes, yeah.
And if you consider how the market reacted back then, right, so you might assume who is wrong here and who is right. And so, guys, something to be aware of that I always forgot to explain. If you have such a huge divergence between euphoria and like the real facts on the ground, one of the sides will be wrong. And once it's confirmed that one side is wrong, you will see a super fast repricing, because then people will cover as fast as they can and maybe even reverse the position in either to the sides, right? So for NQ, let's say if NQ recognizes, or the stock market overall, oh shit, we are wrong, huge repricing to the downside. Other way around, if crude confirms, oh, I'm wrong, they're gonna reprice, right? And then what will happen? NQ is currently sitting, if we zoom out, has its bullish formation. It's still intact, right? So we still have, guys, do you see this? It's basically our bullish flag, triangle flag. So if it plays out to the upside and there's like a proper solution to the whole thing, then another major move to the upside. But if not, and you know how those things work out, uh, then many people who have been building up their positions here over a couple of months will start to cover and cover fast, right? And then you get options plays, and then CTAs will get out, and so it's like the whole gamma will shift to a downside. And it's actually, I mean, if we zoom out a bit, I've been always talking about. Sorry, I've been always talking about this bullish triangle, but actually, if we take a look, one could say that it looks like a bit like not but like kind of a bullish, like a top formation.
Bearish,
Awesome.
bearish head and shoulder.
Yeah, bearish head and shoulders. More right. It's always it's more an art, and you could interpret it differently. But yeah,
Because technically, you say, and we are technicians, don't look at patterns too much. But the one pattern I would say is actually one of the most accurate, especially in the long term, Henry, is the inverse, or the inverse, which is the bullish,
yeah,
or the actual head and shoulder. Because this happens in all assets all across, whether it's commodities, even Bitcoin, indices, oil. And you can look at oil right now, it's actually forming up to be a possible head and shoulder if it doesn't break out from the 100 level. So you have the first shoulder on the initial squeeze. And then, when we took out the highs, when geopolitically it was more uncertain.
Do you mean this one here?
No, at the top side now, on where we are currently retesting right now. This is a very
I mean this one here.
Yes.
Okay.
We had the clear head on the spike up. We came down, we broke, and now we're retesting. Yeah. So this is a possible head and shoulders as well. It's similar to NASDAQ. They're not, a lot of times they're not the cleanest, but because the velocity now all the way to the 100 level was so fast is a little concerning too. Because usually oil likes to build up slowly, right, Henry? Slowly. But, for the last few weeks, why is oil in such a rush to retest the 100 level? That's the question.
I mean, the MOU has been scraped, and they think, or the assumption is, at least on the oil side of thing, that the Houthis might escalate, Iran might escalate, like closing down the Red Sea. Trump might escalate, like boots on the ground, stuff like that, right? And then you get completely next level of escalation. And so therefore I'm actually surprised. I'm not saying I'm bearish on the stock market, but I'm really surprised that the market is still so quiet and especially weeks. I mean, this one really every time we're talking about it, I'm just like laughing inside, like, come on, really? Like, really?
Oh, is it silver? Yeah.
Yeah, VIX.
Or VIX. Okay,
volatility. Yeah. So for given the circumstances that we are in, I'm really surprised that it's suppressed, right? We're talking about it. It's a lot of manipulation is going on. They are suppressing the wicks for the option plays and stuff like that. So yeah, we'll see. All right, guys, but back to oil. We talked about Iran, right? So nobody knows what will happen, and oil had a really nice run up. In the last video, I talked about be really careful with commodities. Don't fade them blindly. Actually, you should never fade blindly. But commodities, it's a complete different tier, because commodities just can rise forever as long as the situation is there and there's no proper fair value. Because if the demand is completely getting destroyed, then things are getting just exponentially out of control. So therefore, don't place yourself in a position where you try to stop the train with your head, kind of, in a way. And
never try and beat the market. Just enjoy the market, be on the trend. Never try and outsmart the market, because that's so because naturally as human beings, we are looking at a short right now, Henry, because we're like, oh, it's gone up for so many days, so many weeks. It has to be overpriced. No, it doesn't. That could be the measured move right there. It would be a scary measured move if you draw that out. Let's draw that out, Henry. From the low to the high of that move, which started below in the 60s. Just at
you mean here?
No. Just on that move that just recently happened for the last like 2-3 weeks? Yeah.
Okay, here 70.
Yes, let's do the measured move right now and see what targets are to the upside, just out of curiosity.
Yeah,
Would be a
130.
130.
Yeah, but I
And
mean,
no, it's
they have
possible.
been, yeah, and they've been talking about it, right? They have been talking about it that if like the West didn't hadn't used up most of its strategic resources, then the oil price would have already been there. So yeah,
Yeah.
but let's keep it in mind. I just pull it out of the
Just keep it in mind.
picture. Just keep it in mind. I pull it out of the picture.
Yeah.
All right, guys. But what's important here? So basically, there's the recent past for I don't know how long the high, right, that everyone was watching. So this is basically our next target to the upside. And my prediction is, and again, prediction, right? No guarantees, nothing. It's just my assumption that if the price manages to surpass and to break the 100 level and stays here and grinds up to 110, I think then at one point to 111, then I think at one point the stock market will start to move, because then they will be not able to ignore it for any longer what they're doing right now, right? Because I mean, look at this. It's freaking 40% plus minus. Let's measure it out. Yeah, 45% rise, and the stock market is still sitting on an all-time highs, maybe like moving plus minus 3-4%, right? So it's nothing. It's ridiculous for how far oil. So and that's what I said 10 minutes ago, right? One of those sides is wrong. So, but who is it? Is it oil? Is it like all the oil traders who are wrong, or is it the stock market? And I can tell you one thing: more times than not, it's the stock market who is completely delusional and basically biased to the bull side only, and just does his things and ignores everything. But once the reality hits, then you get this strong drop-offs, right? The sell-offs where everyone at the same time tries to squeeze through the small entry exit. And yeah, but again, we don't know what happens, right? So just be aware of it. Those are the two levels to watch out for. And yeah, okay, this is my part on oil. What else do we have? Yeah, let's talk quickly about earnings.
And keep this chart, you guys. Go on the intraday, but set out those macro levels, and just keep that chart in mind when you're trading Nasdaq or S&P, because it's very important. Because as we mentioned before, we have some Iranian news today, and this is affecting those specific assets. So don't be afraid to shift gear. No, sorry, not shift gears, but don't be afraid to kind of dissect what this means, the inverse effect. Sure, you can use the VIX as well as the inverse, but it can be delayed at times. But if you want, a faster reaction, then oil will give you that reaction, you guys. And a lot of times oil can give you the reaction much faster than indices. So
yeah, I would not like to be honest, I would not use the VIX as an indicator at all, because it's basically does its own thing. It used to be like when I started out trading many years ago, like 18 years ago, back then VIX could be used as an indicator because it worked really well. But now in the last recent, I don't know, 5 years or something, it completely lost its matter. Might come back, I don't think so, but you never know. So yeah, I would not use it. I would it's always, the stock market is always the correlation with the thing that triggers its most. It's either yields, it's high yields, it's currently it's oil, sometimes it's the US dollar, right? Or it's the yen carry trade, or it's gold, or whatever. There's always some correlation with another asset that's going on, and this is you should always have open and an additional monitor to watch out for. And yeah, so but basically completely agree with Steve on this one. So yeah, but I think I need to hurry up a little bit because I'm just talking way too long.
No, so yeah, we need to talk about this. We need to speak about this. It's all good.
Okay, then another big story of the day: Tesla, got smashed.
Was it 14%? Yeah, minus 14.
Yeah, it was at the lows like minus 15. So yeah, so basically left open huge gap.
Oh, and I love it. That's beautiful.
The
I
gaps,
love
right?
the
The
gaps.
gaps.
You know me,
Those gaps. That's killing
especially
me.
earnings gaps. Yeah.
Yeah, and again, I don't care too much about why it happened. I mean, obviously, Tesla is in big troubles, right? The competition is so high across, like global competition, just rose so tremendously on all sides. So margin pressure and yeah, all over the board, all over the place. So for me personally, no surprise that we got that it reacts in this way. Because and like in my personal opinion, I still think Tesla has priced like there's so many dreams and hopes and visionary things priced into Tesla. So at one point it needs to be re-evaluated. But yeah, it's not upon me to decide how high or how deep it goes. So I don't care. But I care about the overall market. So basically, Apple yesterday -1, Microsoft -2, Google -7 and solid profits, right? Solid earnings, but again, forecast forward guidance for capex investments or next year higher than this year, like 200 billion or something. And
Yeah.
at one point, the investors are thinking like, all right, where does it stop, and when do they start talking not only about infrastructure investments, but when do they start talking about revenue upside from those investments, right? And we also have been talking about a couple of times over the last couple weeks, months, that at one point investors will start to care. They might ignore it for super long, but at one point they start to care, and yeah, we will see. And so yeah, for the time being, Google in the negative, also big gap here. Watch out for. And my assumption is obviously if the overall big 8, big 7 don't improve dramatically, then Nasdaq will get hit at one point, right? There are other stocks that are keeping it up currently, and they're pushing it up, like Intel, like was a rightish in its regards and its forward guidance, but it's not strong enough to keep it up. So I think this is gonna be the one that finally everyone will be watching, right? On when do they report? What day is it here? 23rd. When is Nvidia reporting? I completely forgot.
Yeah. Nvidia.
Nvidia
It's
earnings.
pretty close here. This will be a big one. Yeah. Microsoft next week. Apple next week as well. Amazon. Yeah. Like all the big makes.
August 26th.
I was in August. Okay. Okay. Yeah. Because I
So
know
like in
Amazon. If
1 month.
yeah.
And
Henry, I'm waiting for SpaceX. Come on. Can we just join
I've been
Tesla
I've
and
been
SpaceX
I've been
together into one
I
company?
I have been keeping SpaceX as the last jam
Yeah.
to keep on. No, guys. So basically, just one thing to add up before we move to SpaceX. Nvidia will be the one after all the big hitters, Microsoft, Apple, Google, Amazon have reported the earnings. It will be alrightish. I think the market will actually hold more or less with Nvidia, and then Nvidia will be the make or break it moment, right?
Yeah.
So if oil will still be up and the market will be like sitting in the range where it is right now, but if then Nvidia comes in with a bad report, or that was perceived as a bad report, then they're gonna be super huge hit to the downside, right? But on in the other way, if it's gonna be on oil, it stabilizes, situation stabilizes, and then everyone is just basically caring about Nvidia. Is the infrastructure game? Is the story still intact, right? And
Yeah,
then
exactly.
so
It's
yeah,
interesting
Nvidia.
because they wouldn't be. Oh no, sorry guys. We have New York Open that just hit about 30 seconds ago. Seeing a small sell-off in Nasdaq so far, but it's interesting. Yeah, actually, sorry, we actually had a bit of a sell-off 50 minutes before, 82-point sell-off into the open. Selling off is continuing towards the lows of the days, but yeah, then again, you guys remember this is the London session, also Asian session lows, which I don't look at too often. I know a lot of you guys sometimes look at these sessions and try and split them up. I just wanted to give a heads up. I just want to quickly showcase Henry what I'm seeing right now. And yeah, just guys, remember, look for areas where a lot of volume was put in. Thursday was end of day. This is the real low you should be looking at right here. And yes, it does connect with the lows from London and from Asia, but people are just too zoomed in because this is what they see online. No, these lows would only make sense in the current market if it connects with high volume areas of previous New York sessions. So yes, the London lows, you could say, would create a higher definition of access for support and demand. If it's connecting with another layer of New York, then yes, this is making sense. However, if New York was not setting up and aligning with this area, then disregard completely. So this is a key idea, you guys, not a strategy, but idea when you're going forward, you're looking at these sessions, is does it line up with other areas of New York? And if it does not, then there's a reason why that setup is not working the same as it was before. Sorry, I just had to quickly map out.
No worries.
Since we're retesting that area currently right now in New York. Yeah, sorry, go ahead.
Okay, no worries. Yeah, so basically, guys, just be aware of all of the earnings, right? That might be important. It might be temporary drag down NASDAQ or might even push it up. But the big heavy hitter everyone would be focusing upon is NVIDIA, right? Will NVIDIA be able to sustain its unbelievable high expectations? Will it pass? Will it not pass? So nobody knows. But again, also depends on oil, right? If you see oil is breaking through, goes higher, then it might also at one point force Nasdaq to react and all the big companies, right? So the pressure might become too big, but we will see. All right, let's take a look at SpaceX. What happened to our rocket ship? Oh, still our rocket.
It's still landing.
I think actually I need to correct it.
yeah, it's still coming down. It was up in space, and now it's coming back to fair value. But the question is, Henry, where is fair value? And we're closing in at 50% of that measured move, and we all know
nobody.
50%. In my opinion, some people say the 618, the 73.
At this point, I would watch out for the round number because it's an empty space. So I would really focus on the round number and say, like, right, my target, like, completely out of thin air, right? It's round number. Why? Because people love round numbers, and so there might. It doesn't mean that there will be a huge rebounds, but there might be a I don't know, 10%, 5% reaction. Again, no advice. No, just my personal assumptions that we might see a reaction. And they're different. There actually some people are saying, yeah, if the market goes to 100 or like to a round number, it breaks through and then continues to go down. Others are saying that we might see a bounce. And I'm actually the one who says more times than not on a round number, you see at least an initial reaction.
Yeah, 100%.
So,
and just quickly off topic, Henry, I just want to quickly note, just very interesting how human emotion and psychology works, you guys. And, I'm not going to get into the game theory or even the simulation theory, whether or not we're in a simulation. But, I mentioned this to Henry. And it's actually
let's talk about that. I think it's a super interesting topic.
And then,
let's make another video about
just how human emotion works. When SpaceX was spiking, and I was, I went to the gym and I just hear these regular people in finance talking about, oh, did you get into SpaceX? Oh yeah, I'm buying into SpaceX. Oh, it looks so good. The hype is real, blah, blah. And I talked to Henry next day, and I think it could have even been on stream, you guys, a few weeks ago, where I'm like, that's it, the top is in. If I'm hearing people at my gym, the regulars, speaking about SpaceX, not saying to go all in, but they're like, oh, this is the play right here. I'm like, that's it. It was similar to gold. When people were lining up to buy gold and we were closing in near the tops, that's it. It's just interesting how the world works, Henry. It's like
I think at one point
the taxi driver theory as well.
Yeah. I think at one point we will need to cut out all the parts we're talking about SpaceX from all the live streams and just like cut them together as a long format, and then like having one video where we're talking the other, how the chart progresses, right? How we talk along. I think it could be a really cool video. But yeah. All right. So guys, let me quickly? What else did they have? Yields. Yeah. So yeah, actually, look, we had a breakout yesterday. So yields spiked up, broke out from our upwards range, bullish range. So this is now a super important area. Will the market be able to hold it? And will it go up, breaking through our R2? Or will it get back and go deeper, right? Because if it goes up, it's a really bad sign. And this is also will put pressure on NASDAQ. And again, you might think, Steve Henry, I don't care. But you should, because
You should.
you should, because it's like the pressure is real. Oil, inflationary pressure, right? Yields, also pressure for debt financing and rate hikes and cuts and stuff like that. All the stocks are basically mirroring those things, and they are making NASDAQ. They're creating NASDAQ. So you
And
should
they're all
care.
gapping down after earnings. Look at Tesla down 40%, Google gapping down as well. So everything's aligning, Henry. All the pieces are making sense. Now we're just waiting for the VIX to spike up. That'll be the scary one.
Yeah. So yeah, guys, be aware of it, right? Broke out yesterday from our area. We are testing this year's highs, sitting right on it. So it's basically, you could say it's our current support area here. And next target is this level here from last year. And that's how the market, guys, again, it's not complicated. The market moves from level to level. It's basically always does the same. So for 8, after for 8, it's 5. And those are, you see, also round numbers. 500, 4, 800, and there's like white space. So the market, there's nothing actually that will stop it, right? So if it breaks here, if it can hold through white space, so this is the logical next level because there are no levels in between. And then once it breaks above 4.8, it goes up because there's also white space, nothing that holds it back. Really not complicated concepts at all. Just be aware of it. One thing I just want to check that I like to see from time to time to check is the high yield. And why is it important? Well, it matters for high yield bonds for all the refinancing of the small unprofitable companies, right? Especially for Russell and also some companies inside NASDAQ. So if we see panic on the yields and they collapse, like last year during Trump tariffs warning, then it also creates it's also a signal to the market, and just be aware of those things. Yeah, but again, those are more advanced topics that most of the people don't watch. But if you want to take it seriously and want to learn more, then subscribe, turn on notification descriptions down the link before, follow Podia, check out our accounts, best in the industry, especially for the instant funding accounts. Use pre-market code to get 25% off. Otherwise, follow Steve. He has also a really, really good newsletter. And if you have any questions, either write us, leave a comment in the comment section down below, or hit Steve or myself up on X or anywhere else where you can find us. And yeah, I think we're good. I hope, guys, if you have any questions, if everything was not understandable, let me know. But yeah, one thing we did not spoke about the main indices so far. So NQ, we're watching still our 2850 level, 500 level, right? Been watching it now for weeks. It's still support area till it breaks. Like right now, it looks like might be tested, might be broken, but again, wait for the final signal once it breaks and is confirmed. But for the time being, if it's broken, then
there's a big gap below.
There's a big one. It's basically the target here. And that would actually make sense because you see, it perfectly would align with the middle of this range here. That's been building up here, and that's a kind of a logical way that the market will go there. But yeah, it needs to pass this all-time high here first, because it's currently also a support area. But yeah, let's see what happens. ES, that's actually a really interesting structure for ES, right? It looked super bullish. We broke the structure, broke the trend. So, but again, as I said in the last call, I don't like uprising or like rising or decreasing trend lines, because they might get corrected all the time, and it might become a range, like going here, confirming, staying, right? Can do all kind of these things, and then it might become a long bullish pattern. So therefore, I'm not a big fan of them, but it's just something to be aware of, that for the time being, we have broken this trend line, and if we stay below and it's confirmed, and we might doing something like this, it might be a bearish scenario. If we can fight through the 74.85 area, we might go higher again. And guys, you hear I'm saying we might, we could, because I don't know, and nobody knows, and this is how you should work inside the market. It's all about being aware of all kinds of different scenarios, and then just following along with the chart. And yeah, YM Dow does his thing. I'm not sure about this one here. Actually, we can make the case. Has the gap been closed? No. So we might make the case that the gap itself might be a possible support area here. But yeah, Russell also still holds its support area.
Yeah, just letting you know, Henry. Yeah, Nasdaq is breaking lows. Some strong bearish price action just happening on intraday, you guys. So just be aware. Strong selling going on.
And this is, and now you could say like, all right, but how do I know which one to trade, and how do I know in terms of signals? Well, this is where your system and your tested strategy should come in. What kind of style do you trading? Are you scalping? Are you a mean reversal trader? Are you a breakout trader? Are you failed? Do you trade false breakouts? And do you trade chart patterns, right? There's no right or wrong. It's basically just pick one or two, backtest those, and see which one fits you best. I like, if you're a new trader, I'm always recommending to try them all. Basically, trade 1 week or one whole day, or at least couple of days. Let's say only price action, then trade a couple of days only breakouts, trade a couple of days only ranges, or those kind of things, and get a feeling. How do you feel trading those things? And then just stick with the one that feels best for you, that you can execute the best and most flawlessly, right, without too many mistakes, too many errors. And then stick with it, learn everything about it, and this is how you can pick a style. Basically, just test it. And yeah, and Steve will, I give it to Steve.
Yeah,
over to your style. So tell the people something about market correlations.
And clean up the charts, you guys. Clean up your charts. Don't use 50 indicators. Use what just makes sense. As you guys can see here, I just use levels. And of course, I'm using other areas, other tools as well. But on TradingView, I'm only using levels and my ratios. And what are we seeing today? We're seeing Nasdaq sell off. Doesn't want to close the gap just yet. Not saying it has to happen today. It can happen another time. But I'm just keeping this in mind. As long as we are below the level 28,740, I'm only looking at weakness plays, because this is what the intraday bias is giving us, you guys. And we're getting actually news right now. We have the first 15 minutes, Henry, and let's just see what the numbers, because when you mentioned the 49, that has my my interest very intrigued right now. It's just so to see what kind of number we're going to get. We're pending. Oh yeah, we got 53. Look at this, bullish. Boom. Not even close to the 49. I feel like Henry wanted the 49. He wanted some volatility just for the reaction. No, I'm just kidding, you guys. He doesn't want the US going down.
I would say we currently have enough volatility. I would rather see some stability for a while, where the markets are just quiet and predictable, and you're not getting hit from any random ways. And that's guys, and that's the thing what we're also trying to bring across. At Podia, we don't want you to fail. Therefore, our accounts have those extreme friendly rules that are clear to understand, that don't have any hidden stuff in them, because we don't want you to fail. We don't want you to buy a new account. For us, therefore, we have this clear path to the live account, right? We are considering ourselves more of a live path firm and not a sim fund firm. And this is exactly what's happening. So I would rather see all of you succeed and become a big traders with us, because then it's going to be a big win-win for us and for you, both parties involved. And this is what I like, how I do business. I like to be in a win-win position with all parties involved. And so, yeah, I would love to see some reduction in volatility, and especially getting that all those random tweets and unpredictable things would stop, right? And you just know, all right, news are coming out. There's nothing, there's nothing else, and you can basically just trade along and don't be afraid that your 100 points profit at any time might be wiped out within 10 seconds because there's some tweet coming on.
Yeah. But yeah, then again, you guys were intraday traders. Don't be expecting to hold your position too long term. This is what always helped me in the past. I never got, I'm never too greedy. I realize when, momentum's starting to shift and I see maybe other two indices are starting to sell off and my bullish bias is not as strong in NASDAQ. This is why I have other, correlations, because, the momentum can shift at any time. Just because the target was met on the last few setups doesn't mean the target will be met today. Whether you're looking for pivot highs, whether you're looking for gaps to be filled, things are always going to change. Every day is going to be different. Just accept that your risk reward won't always be the same. Sometimes I have negatives, sometimes a 1-to-1, and all other times when I trail, I can have a 2 to 3-to-1. But I embrace that every day is different, and I close my book, and I am happy that I'm either break even or in profit for the day, and that's all that matters. So yeah, you guys, like Henry said, we want a win-win situation here with Perdia and the client. We want you guys to test out your trading skills and succeed with the live account, because that's the whole purpose here. Of course, other prop firms have different templates, have different structure, but not every prop firm is like that. And Perdia is here for the long game, and that's what we hope for you guys to be here for the long game. So with just a quickly note on the economic front, you guys, slight miss on the flash manufacturing, but still over 49. And then we had a beat on the flash services, which Henry was mentioning is the important print. So 53.6, actually a pretty big increase. So this could have been potentially because, all the events happening in the US, could have been World Cup, increase in, entertainment, other services, because it's the summer months. So no surprise there.
Yeah, and I'm actually just seeing that even though NQ might be selling off, if you click on YM on Dow, Dow is ripping, right? So
Dow Jones, and Dow Jones is a lot stronger on that news front when it comes to services. So it's not always or only tied into the tech area and AI. So if we look at where the gap was on Dow Jones, the thing is, I don't even know if it had a gap, my friends. Dow Jones never had a gap. So it's very interesting how the chips, the AI heavy indice, NASDAQ, had a bearish sell-off right on open, gap never was closed, and with Dow Jones, it just smoothly gave us bullish reaction, trended up, and now it's holding on its bullish bias. So I'm just going to go back to NASDAQ, you guys, and update the list. So I have NQ as the weakest, still intact. We're holding, and we're seeing some support from previous days. Demand area right around 20,470. And let me just update the list, you guys, because Dow Jones is our strongest pair for the day. And I'm always keeping this in mind and talking out loud, because I'll remember this for when I see my setup and my trade that could come, anytime, whether it's going to be in 15, 30 minutes or come in 2 hours. Anytime from now until lunch break, I usually see my setups, and I like to keep this list on here. And Russell is about second place, and ES in third. So what I like to do, you guys, is whatever's in first and in fourth place are the indices I will most likely trade, because they are creating the strongest trend. And I want to pick out the trend and not the ranging market. So let's see. Nasdaq just took out the lows, you guys. Just heads up, 20,430. Even though it was a bullish print on news, but like Henry said, it's a stronger reaction on Dow Jones. So let's just quickly map out the pivots on these indices just to show us the flow, instability, and the risk to the downside. The risk to the downside, let's zoom out, you guys. And where, yeah, this is about the low of Friday, but you know what? I like to look at the open on New York, not so much the lows. And we have actually a significant gap from beginning of May. So if we zoom out, let's just see, you guys. Doing this all live. I want to map out the best area where New York was opening, right around here, 20,140. Let's see if this lines up with other areas of support. And we also have New York open here. I think this will make much more sense from Tuesday, because the gap from on the 4th is, I think, a little too far away. So yeah, let's map this out. This would make a little more sense, you guys, where it was acting as resistance and support, and we blew through it in the month of May, 28,282. And let's see if this lines up with other areas of support. And yeah, we're just, looking at NASDAQ right now, you guys. Heavy selling, and the probability of us hitting that pivot is quite high. We are only about 70 points away. And these days, I mean, what is 70 points? 70 points can be taken out in a few seconds. And now let's do the measured move. So anything below 20,470 is bearish. And if we're able to hit this level, have some consolidation, then my bias could possibly change. If the flow of volume goes back into NASDAQ and we see a pop, then I will look into some ideas there. But I don't look into ideas until these pivots are hit. So this is our risk to the downside, you guys, 20,282. And now let's see the measured move to the upside. If we get some big news today, you never know. Always expect unexpected. And where does this line up? 29,000. Let's just say 200. I like the whole numbers, you guys. 29,200 to the upside, and strong area of resistance. We were never able to hold it, so we were able to push through it on Tuesday. Dove right through, pushed through it again, looking like a head and shoulder on Wednesday, and came right back down. So heavy area of resistance. You could also say heavy area of supply, where buyers never stepped in and didn't accept those prices. And let's just wait and see where prices will be accepted next, and quite possibly down at 28,282, you guys. These are my levels on NASDAQ that I'm looking at. Next, let's look at Dow Jones, as Dow Jones is our strongest pair. Yeah, so let us know, you guys, which index you're focused on today. We know many of you, 90% of you are NASDAQ, but a lot of you are looking or have Dow Jones and ES on your charts just for correlations, just for ideas where the shift is going. So yeah, let us know whether you're trading the opening range or whether you're trading the IB. I know a lot of traders look at the initial balance. They like to wait even longer, an hour after. But the reason why I don't like to wait that long is because a lot of times once the initial balance is set, the entire move is already cleared for the day. I noticed that for about 40-50% of the days where that range is set and the trend is a lot of times over. So for me, the first 15 to 30 minutes is enough to see where the first trend is met, and see in the next 30 minutes whether we come back into range or we keep seeing new highs or lows. Is where I like to see entries. So yeah, Dow Jones, let's look at the open of the day, where we saw the gap on NASDAQ, and that was right around here. Just let me map this out, you guys. Just give me a second. And this is the same pivot from NASDAQ, and as you can see, not Dow Jones painting a completely different picture. And this is what helps me, you guys, cut through the noise, because each indice is always telling a different story, and because Dow Jones is way above that pivot line, what I like to look at now is what's the risk to the upside, because Dow Jones is bullish. Let's actually mark this out as a green pivot.
Steve, I just want to add one thing
Yeah.
that I forgot to mention. Wait 1 second. So there is the market always spins its own story, right? So outlier and flash services PMI might indicate the business service, like the economy is so strong that we don't need rate cuts. And because we had this hawkish Fed statement, was it 1-2 weeks ago, or was it this week? I don't remember. It's like we had this more hawkish Fed statement, right? It might be an indication, like, all right, there will be no rate cuts whatsoever this year, and so they are basically repricing possible rate cut expectations, pushing them further away, because the business sector, and obviously it's a beat of 2 points, right?
Yeah.
So it's quite a huge beat, and this is something I want to be people aware of. I forgot to mention this. So it's basically to the downside, right? But also to the upside, if it's like if there's a strong beat, that you could argue that the market might price in, oh, economy is super strong, so it might get reduce the chances of rate cuts, and then obviously markets love rate cuts, markets love low rates. So just something to be aware of, guys, how those things work.
It also depends which quarter we're in, which presidential election we're in, and yeah, markets are always shifting, you guys. We're not saying your entries, your setups should shift, but in a way, you could also shift just how long you're holding your entries for. Because some days I'm holding, seeing the same setup, because I want to see the same 2-3 setups every day, but my mindset always shifts of how long I'm going to be holding those trades. So this whole macro idea that Henry's talking about could play into your setups as well. So yeah, this is just what I'm looking at for Dow Jones, you guys. Risk to the upside, 52,473, matches up with the high volume node of Wednesday, where we saw the clear sell-off. So this is going to be a big friction point, strong reaction area. I'm not saying we're going to reject, and I'm also not saying whether we're going to consolidate and push through, but this will almost guaranteed to be a strong reaction point, because it was an area that was not accepted from the previous days of the week, and now push through the new area 51,900 into the risk to the downside, you guys, is 51,337. And this was clearly a strong area of demand where we pushed into on the beginning of June on the 11th. So yeah, all these pivots make sense. Always ask yourselves, you guys, these questions. Who's in control? Which indices are more bearish? Which indices are more bullish? Also ask yourself, am I rotating my accounts? Am I scaling my accounts? What day of the week it is? We mentioned it's Friday. Maybe measure your risk a little lower instead of risking, let's say, 5 to 10% of your prop account. Maybe you risk 2.5 to 3%. If your idea was correct, you're in profit, look into another setup, only risk what you made. That's another idea as well. So yeah, guys, just, be easy. Don't rush into the process. Don't look too much on, X, because you don't know what's believable. Only look at maybe some mindset topics. I'm providing, to put you guys at ease, to help you guys on the mindset, on the behavioral side. I'm never floating money around, never floating Lamborghinis around, just always trying to help you guys. That's why, I teamed up with Perdia, because it's nice. There's no volatility with this prop firm. Fred Henry, we're not showing up to intensify the process. It's, slow things down, create a professional setting. Never feel alone, you guys. Come join the newsletter, come join the Discord on Perdia, connect with other traders. I think that's the important thing here.
Yeah, perfect ending. Everyone, check description down below, subscribe to Podia, turn on notification, try out the code pre-market to get 25% off. Give it a chance if you didn't have so far. Otherwise, follow Steve. Hit me up if you have any questions, or Steve, and turn back in. We will be live again on Monday, 9 a.m. Eastern Time. And up to then, everyone, safe, good trading, trade safely, think for yourself, and have a good weekend. Enjoy your
Yeah.
time.
Thanks, Henry. Thanks, everyone. Take care then.
Thank you, Steve. Bye bye, everyone. Cheers.